Hello and welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, July 25th, 2025. Ron Quaranta here with my amazing co-hosts, David Brill and Joshua Klayman. Thank you all for joining us on LinkedIn Live and on X. Before we begin, our usual disclaimers, please keep in mind that nothing discussed is investment or legal advice, certainly no token recommendations at all, and then anything David or Josh or I are discussing really are our own personal opinions, don't necessarily represent the opinions of our firms. David, you're back from the super yacht in the Mediterranean. Josh at her beachfront compound. It's been yet another busy week. David, I got struck this morning looking at the news. Let's dive into some of the market stuff if we could. Josh, there's certainly no shortage of the legal and legislative work to look at. David, I was convinced Bitcoin could hold 116K. It didn't. And we're seeing a lot of flickers in the news, you and I, of someone selling. And we did see some of the news. I got to ask about the price action, David. You and I had the opportunity last evening. We were at, you were holding court at the Players for the WSBA's Networking and Cocktails, a spirits-filled Algonquin roundtable of geniuses, David. David, talk about the markets and the data that you and I and Josh are seeing. I'd like to level set that for our guests.
Sure, and we had a spirited conversation about stablecoin, so we should definitely have that conversation with Josh.
Yes.
So basically, it looks like there's a very large holder who's selling in a low sort of volume market, and so it's moving the price more than it usually would. And so typically, it looks like it's being done through Galaxy, and typically that would, the way this is being sold, it might be a government entity, and I'm not saying our government. Because I don't know if you remember when Germany sold their Bitcoin last year, was sort of like a straight line dumping of the share of the token. So hopefully, this tranche will get sold soon. And 116 is a level that we've been looking at, and so I think that we'll see where we kind of stay. But I think one thing that is really positive though is that like Ethereum and the altcoins have sort of stayed level today with a big sell off in Bitcoin. So I think that's very positive. And ETH July has been an amazing month in ETH. I texted you guys. There's been over $4.5 billion of inflow into ETH ETFs. So ETH is having its, I don't want to say it's having its moment in the sun because it's going to have many moments in the sun, but it's having its summer fun right now.
Josh, you and I were getting the text messages from David, and I realized he hadn't gotten over the time zone difference. So, David, I'm grateful for the ETH updates. Josh, was the Klayman family office selling BTC?
It was in fact not, but you do have to wonder, like for some of the large holders. I mean, I realize that many people are Bitcoin maxis, right? And it's digital gold in many people's views. But you figure, like, if you are a large holder, who are your counterparties going to be, right? And so if you want to take some profit at some point, I would imagine that you have to trickle it out at some point, right? And it's always potentially going to move the market, at least until we get to a point where the market is much different.
But Josh, that's a really interesting point, and David, I wanted to push back on that just a little bit because I'm with you, Josh. It's a very different market landscape than it might have been, call it 5 years ago or something, when whales were unloading. David, you and I know the multitude of the OTC desks that are out there, the multitude of the market makers out there that could certainly spread out large institutional orders. Is that a symptom of Bitcoin writ large, David, that even in the spreading out of that, even in the maturity of a marketplace where you and I can go out and unload across 15 different OTC desks, it still impacts market spot prices?
I will say this, depending on how much you're talking about, it still depends on what the client's mandate is. If the client's like, I want to be out of my large Bitcoin position by the end of, by July 25th, and the person who's been charged with doing it hasn't done it yet, then they're going to sell. So I do think the market has absorbed a lot of Bitcoin without a big downturn. We've seen large whales selling like 80,000 Bitcoin. And again, these people have made, 10, 20, 100x maybe in some cases or 50x. Of course, like at some point you're going to sell, even if you're a true believer. Like you're not just going to hold on to it, indefinitely. There'll always be some selling. So this really doesn't concern me. I think most rational people with those kind of gains would sell some of it. And no, it doesn't concern me too much. Plus, it's the summer too, so this summer has been different than many other summers, but this isn't a surprising. This week actually has felt like the first kind of summer week a little bit in crypto for a while.
Yeah. Josh, go ahead.
Sure. Is it okay if I just add in like some thoughts about this? So I agree with Dave. Your question is a good one. I think it definitely seems to be something different from, if you remember back on the days where like Coinbase had 3 tokens listed, right? And Litecoin, right? And when Charlie Lee sold his Litecoin holdings, right? And made the announcement. That was, I don't think we're seeing anything like that, right? But I disclose that that's what he was doing. So, but I think also there's been some interesting news. I don't know if you guys saw it a few days, but where folks were reporting that in the UK, there was a possibility of selling up to something like 6.7 billion in stolen Bitcoin. To, I guess, fund something. And yes, so when it's all very important, whether it's that size or whether it's smaller. I know even dealing with people who may intend to be or may currently be secured lenders, where some of the collateral is, a big question is like, okay, well, what is your liquidation strategy if there's a borrower default, right? Do you want it sold even if it moves the market? Do you want it sold and
right?
Which of course, if you're selling a huge amount of digital asset anyway, it's going to be right, like just by the way it's satisfied. Anyway, maybe it's too
that's a really good point, Josh, and I think it kind of softballs me into part of the other conversation we had last evening. And for everyone in the audience, LinkedIn and X, thank you so much for joining us. If you've got questions for David or Josh or I, please put them in the chat. We're happy to address them. David, the other interesting part of this, and Josh mentioned lending. I think we all saw the news. Someone correct me if I'm wrong. I think JP Morgan's looking at ways to offer crypto lending to clients, which in a different day and time, David, would have been an absolute game changer for the markets. And I think a lot of people were like, yeah, well, you're overdue. But David, the other interesting part of the conversation was the crypto treasury conversation. And I wanted to dive into that a little bit and would love your collective perspectives and certainly want our audience's feedback on this. It was one thing for MicroStrategy, now Strategy, to be accumulating Bitcoin. But David, the interesting part of the conversation became twofold. One was, holy cow, everyone's suddenly a crypto treasury company. Isn't that a little weird? And is that sustainable in the long term? And two, when you look at some of the really sophisticated players, I mean, Strategy as a publicly traded company, pretty damn sophisticated, arguably, really doing a lot of different esoteric things, relatively speaking, to acquire Bitcoin. David, is the crypto treasury market already saturated? And what happens when you and I see 2 or 3 interest rate cuts before the end of the year?
So one of the interesting things is, look, Strategy created the playbook, and they also have an existing business that makes money. And, so they're sort of definitely the leader in the clubhouse, and they're the first mover. I think the question you have to ask is, what is differentiating these other treasury companies? Because if you think about it, if they are raising debt and needing to raise debt or sell shares to buy more Bitcoin, you're sort of diluting the position you may have when you bought the shares. And then ultimately the Bitcoin's never going to be worth as much as if you had just bought the ETF, because it's an operating business and all those costs are going to come into that business. So in a way, I think some of the treasury companies have to show why owning them on a percentage basis makes more sense than just owning spot Bitcoin or owning the Bitcoin ETF.
But you could argue, David and Josh, I'd love your perspectives on this. I think it was a Fortune newsletter, forgive me if I'm misremembering, someone in the audience correct me, that really posited the idea that Bitcoin handily beat CAGR, consolidated annual growth rate, of NVIDIA. NVIDIA's growth rate was, I forgot the number, Bitcoin was well above it. The argument almost became, David, everyone needs to be a Bitcoin treasury company, or you're just not going to be able to get true alpha in the market.
So,
do you agree with that?
So I believe that they should hold Bitcoin on their balance sheet, but I don't think that every company needs to become a Bitcoin treasury company. So I would say hold it on your balance sheet. If you have a differentiating business model, then sure. There's one Solana company, and it's a shame I can't remember the name, but they are not only holding Solana, but they are, running validators. They are staking. So they're offering their, people who own those shares, the upside and potential upside in Solana, as well as validator income and staking income. So that's a differentiator and different than just owning Solana. So that would be the distinction I would make.
Yeah. Josh, are people knocking down the door at your offices saying, hey, we want to become a Bitcoin treasury company? And how do you handle the demand?
So I would say, yes, that is something that people are looking to do. People who have, for example, existing public blank check companies, right? Like existing SPACs, or they can do something like things like that. But also, I think, and frankly, on rather urgent bases, sometimes to the point that it's so urgent that you really properly on board. If you are someone who has to do KYC requirements checks and everything on other clients, but investors, people who are being asked to make large dollar investments, like we're talking hundreds of $1 million of investments as like not lead investors.
Josh, I know you're probably near the beach in Monaco or something. Just FYI, your Starlink is a little glitchy. I just wanted to let you know. But
yeah, I hear some kind of a repeat of what I'm saying. Like I hear an echo, but I'm on pretty powerful Wi-Fi. So
is it, David? Do you hear me? Okay.
I hear you fine. I think Josh has like a line into Elon, so she got the extra high beachfront compound. But it's funny because
for those who don't.
It is interesting. But look, I think it's great that there's more opportunities for companies buying crypto and being in the market. I just think we just have to be mindful that it's really hard to value these companies. Like they may go to market at a certain price. A lot of times, if it's a roll up into an existing company, the existing shareholders are going to sell. They're not going to have restrictions like other investors may. So there's not going to be a lockup period. So you really just have to be mindful about how you value those companies and those share prices. And I'll tell you, a couple of weekends ago, I was trying to figure out what I thought the value of one of the companies was. And it wasn't clear to me based on the stock price how you got to where you got. So, it's just something you do need to pay attention to.
David, Josh, thanks so much.
By the way, that's what you were saying, David. It was about what Emma was saying. Josh just pixelating and some little glitch to me. Sorry.
Sorry, Emma. Shout out to Emma Channing for her comment. No one in their right mind. Going back to our topic about potentially government entities dumping, should think it is a good idea to dump that amount of BTC into the market. I mean, there are certain authorities who have done that, but that doesn't make it clever. She's absolutely right. I'm going to do the shameless plug. I do want to shout out to Emma Channing, who is our latest corporate member of the Wall Street Blockchain Alliance. Emma, you are stuck with us for all time now. Welcome to the family. Josh, go ahead.
You sort of took what I was going to say. Hopefully I don't glitch or pixelate and say, well done, Spencer Fain, Emma are there, based in Denver, and we're thrilled for her and for them.
Yeah, absolutely. Congrats to Emma. Greg Murphy weighing in up in Toronto. Greg, thanks so much. Regarding Sol, I think you mean Sol Strategies. David, is that the ETF you're talking about?
I think it could be. And I do think it's interesting. Again, we don't make individual stock picks, but I like the idea that this company is, owning Sol, running validators, and staking. I mean, obviously there's a risk in running a validator, slashing, staking with slashing. But I do think if you wanted full-on exposure, that's an interesting way to get it.
David, let's dive into, let's move away from Bitcoin for the moment, because you and I have been talking about Ethereum for a while. I think the three of us deeply know my thesis about Ethereum. I'd love someone in the audience to tell me I am. Sorry, Emma. Yes, Spencer Fain is the corporate member. Emma is part of that. Congratulations on the partner role. And I'm sorry, Emma, I didn't have enough coffee today. David, Josh, I want to dive into Ethereum a little bit. You both know my thesis on ETH. That said, David, I'm seeing some really interesting prognostications about ETH as Wall Street sort of leans into Ethereum as the level layer 1 and layer 2 build-ons for institutional work. I saw a recent price projection by end of year 15,000. David, I don't see it. Tell me I'm right or tell me I'm wrong.
15,000 is optimistic. But, one thing we do have to keep in mind is that we continue to see highs in Bitcoin. And, Ether is still below its all-time high of around like 4,900.
Mm-hmm.
So what I would say is that we continue to see this demand in the ETFs, which outstrips the new ETH that comes into the market every day. I mean, I have a thesis that we'll certainly hit an all-time high this year, and I was thinking more in the 6,000 to 8,000 range for the end of the year. But I think Tom Lee getting into the market, he's a well-known person and very bullish on it. So I think again, we're not making investment advice, but I do see a lot of green fields for ETH. The one thing I would add though is that these are not going to trade in a straight line. They're going to go up, and then there's going to be a sell-off, or they may continue to go up, but there will be sell-offs in between. And sometimes they can be harsh and scary for some people. So I think people need to have a bit of a longer-term horizon, because otherwise, you look at it at the wrong day, and you may be up a lot or you may be down a lot. So it's really
you can't day trade this stuff and look at the monitor.
No.
David, Josh, Emma continues to weigh in, wondering if I'm going to wager on an ETH thesis. Certainly pushing gambling in a way that is disturbing. Emma, I'll agree with you at 7,000, David, but I think above that it becomes a little bit iffy. Josh, go ahead. I know you wanted to weigh in on crypto lending as well.
Yeah.
So with respect to crypto, or as I would say, I'm secured by certain kinds of crypto.
Mm-hmm.
This is coming, 100% coming. It's coming faster than you think. And I would just listeners out there, and also for those who are thinking of rolling out a lending program, that old friend that you guys probably mentioned at the UCC is of incredible importance in this, as well as analyses, right? So if you think about if you're a secured party or a potential program, you really need to understand if those assets are going to be held by a third-party custodian, right? What are the contractual arrangements and agreements between that customer? Also, what governing law governs that? Also, is there, in connection with that, is there also an Article 8? If there's a default, how do you liquidate? What is your liquidation strategy? All the sort of things that I was sort of alluding to a little bit earlier. It's not just as easy as like push a button. Maybe it will be, but I think those who are planning on rolling out these are doing extensive analyses of third-party custodians and all sorts of.
Josh, go ahead. No,
really, I went through that drafting one of these agreements, a couple of years ago, and figuring out, the custodian and the oracles, and making sure that if the numbers reach a certain point, that the custodian can go ahead and release the tokens, and the less liquid tokens obviously move a lot more, and so and we don't really have that many airdrops anymore. But there are all these other issues that came with the lending. But I do think it's a burgeoning market, and there are a lot of interesting legal issues, and absolutely the UCC is important in there. And I think we're going to see, as people see more gains in crypto, they're going to want to be able to borrow against it, and we're going to see more mature way to go about that.
David, on the borrowing, I mean, just harkening back to the JP Morgan item that we talked about, and I didn't dive into it too deeply. Is anyone aware? Is that for only institutionals? Is that HNWs? Is there what are the parameters on the JP Morgan lending that they're talking about? Any ideas?
I imagine it would be on an institutional level. I don't think they would really want to roll out on the first go retail focused.
Yeah.
Because I think that would be much more complicated than an institutional one where there's
Fair.
probably existing relationships and I have a feeling Josh might have an inkling about this. I see you leaning into the camera.
We can feel she wants to talk about it.
I mean, I would say I'm intimately familiar with this.
Okay.
But I can't talk about it. But in general, if you were to think about institutions and how they might approach this, I would tend to agree with David Brill and what he just said.
Yeah.
David, Josh, thanks so much. The other side of everything that's going on, Emma, I couldn't get David to bite on the wager of ETH, but we'll maybe over a cocktail, we'll figure that out. But David, Josh, the other side of all of these conversations is certainly what's happening in Washington. Genius Act is now the law of the land. I think it was CLARITY and anything market structure related is moving forward, particularly in the wake of full disclosure. We're going to be responding to the request for information from the Senate Banking Committee, David and Josh, on market structure for digital assets. We've seen anti-CBDC. And now Congress is away for summer recess. See you in September. I guess this brings me, Josh, to a conversation we've often had. We have this conversation, shout out to Adam Goldberg, shout out to Dina Ellis, who kind of are our policy experts and members of the WSBA. Josh, what do you anticipate happens from a legislative perspective and even regulatory perspective later on in the year?
Well, I think a number of different things, right? We do have the Genius Act as law. So from a regulatory perspective, we now need the agencies to engage in rulemaking, right? So I would imagine that will be underway, right? Going through that sort of a process. We're talking everything from the Fed to the SEC to the CFTC, right? Trying to implement aspects of the Genius. We will see that from a regulatory perspective. From a legislative perspective, I'm definitely an insider, or as I said on an earlier call today, I'm not even a Washington outsider. But what I think we've heard, in the event that Congress isn't able to get something through by the end of the year, then we're worrying about midterms, right? And whether, when January comes, that people's focus may not necessarily be on a market structure. But unlike the situation where with the House just accepted the version that the Senate had presented. Here we have a different situation where the House has passed the CLARITY Act, and now we have this new discussion draft coming out of the Senate, that Haggerty and others have put forward, and the RFI that you guys mentioned, which is due for those, I think, August timing. I would say, may I just mention one other thing relating to this? And this shows my complete ignorance of various things, which is that I was on, like I said, a call earlier today, not a privileged sort of situation, but I had been talking about this and someone said, oh, didn't the House get shut down anyway early because of the concern about it? And I truly said, I'm not sure, because I've been so focused on the actual legislation that I was not even. What do you guys think of that? Maybe not the files themselves.
I will not weigh in on anything of those files at all. I mean, overall, I think everything
is shutting down.
Yeah, I look. Okay, David, you go first.
No, go ahead, Ron. Go ahead.
I think this is another example of how political posturing has ripple effects across all of the different things that representatives are trying to do in the Congress on behalf of constituents, including things like potential legislation, including some of the things that require the rulemaking that we've been talking about, the delays to, CLARITY, for example, and things moving forward. It's never a good thing when the entire House is closed for their really ridiculously long summer session because someone doesn't want to talk about some really embarrassing stuff. David, tell me I'm wrong, and we're going off of a deep end here, but.
Well, I don't think you're wrong, but I do think that progress is going to be made because, look, first of all, this has been, the House version's been flipped over to the Senate, so that, they still have the ability to move things forward. I still think that there are conversations being held with staff members and with lobbyists and different folks and looking at different provisions. And so I don't think we're going to lose too much momentum. I just think that, like Josh said, I do worry that we have a window to get something done, and can we get it done? But it also has to be the right legislation that we get done. I don't want to see something that is insufficient and that will leave too many gaps for us as a business moving forward. So it's a balance we have here.
You know, if we're talking about DC, Josh, David, completely agree with you. I think there's two things that I wanted to raise as well. If I recall correctly, it might have been Bo Hines who had mentioned the 6-month President Executive Office review of digital assets. I'm forgetting the specific title. And I think also, someone correct me if I'm wrong, the SEC Crypto Task Force information is going to be published relatively soon. Did I misread that? Or David, Josh, what are your thoughts on what those might say?
I mean, my thought as far as the crypto report from the White House is that I would expect it to be positive. Adam Goldberg just posted that it'll be coming out on July 30th. I expect it to, be happy that Genius was approved and talk about the potential opportunities. I have a feeling it's going to be very positive about Ethereum. Theories about that, different folks who are supportive of Ethereum, I think that would be consistent with their support of it.
Josh, did you catch that kind of softballing into the pro-Ethereum position?
And Adam made an interesting comment. He says that it stands to influence the debate about Clarity Senate Banking Committee draft. So perhaps we'll hear from the White House what their view is on what market structure should look like. So I think these are all positive things. Like, I don't think this administration is going to come out with something negative about what Congress has spent a lot of time on the last few months.
Agreed. But again, it's always elaborating for me to see the sausage making behind the scenes, and makes me realize how difficult. No, but truly, David, Josh, we've talked about this, how difficult it is for staffers on the Hill or staffers at regulators, just the hard work of putting together legislation that at least a lot of people can agree on is not an easy slog for any of them, and my thoughts go out to them because we've worked with many of them.
One thing I would say, Ron, yeah. Oh, go ahead, Josh.
Go ahead, Josh.
I'm just going to say, not just the drafting of the legislation,
Yep,
but the massaging of the debating to get the votes, and then also trying to be happy. I mean, we really are indebted to those staffers. For example, Chris Lamb comes to mind, right? I know there are many others as well, yes. But I mean, he, to me, and I think to many, he is tireless.
Yeah, absolutely.
We also have to give credit to, some of the Republicans who have been engaging on this topic before, Trump won the election, and really engaged. And so as they're participating and leading this process, they've been engaged for quite a while. So that's really helpful too. Yeah. So it's not like we just started, in January, but we've had a running start, before even the election.
Yeah, when we talk about DC, I'm either asking Adam Goldberg or Dina Ellis, Josh and David, what does this mean? Because a lot of it is pretty perplexing to me sometimes. Emma's throwing it in there, David. Sneaky David, tempting on the wager. I'll call you later this afternoon, David. We'll figure out what the wager might be. I feel like the three of us are still overdue for some dinner. David, Josh, I'd love to go back to the markets on one other thing if we could. I've been watching the news certainly beyond crypto. Shocker, I know. But David, meme stocks are back, which for me always precipitate crazy rallies in some of the meme tokens and a little bit of the euphoria. That gets a bit frothy. That always makes me worry about unintended consequences there. Am I misreading the kind of tea leaves around meme trading, David, and how it might impact the crypto market?
No, I don't think you're misreading it. It's just interesting. This market has been sort of slow and steady since April. Yep. So, I wonder what the catalyst is that now they're sort of looking into these meme stocks. Maybe people have been out of the market. And look, I knew a lot of smart people who thought this would be a down year in the market. Mm-hmm. So people have been really surprised by this gain we've had since April. I think it's like 25% since April. So there's been a lot of surprise and people have been caught sort of flat-footed. But no, look, I think that we have a very powerful, in our space, rally coming in the altcoins and the sort of meme coins and sort of all of it. I don't know how long it will last, but we've seen Bitcoin really run up. We've seen Ethereum have a nice run, but I think all the other tokens, I think we're like on the precipice of a run up in some of those as well.
And we're not making price predictions,
No.
David, as you know. But Josh, I've got to imagine the family office has been weighing in on some of the meme stuff.
I mean, I just follow your guys' lead. I just watch and learn, watch and learn, watch and learn.
Lord.
But yeah, I will say there was another kind of adjacent development, although it's not crypto, but it does involve someone who is in both, which is Michael Sachs, right? The AI and crypto czar. We have seen on Wednesday, the White House and America's AI action plan called Winning the Race. And interesting, I think, to the extent that I do think there's a lot of interplay between AI, gaming, and crypto, right? Is that obviously an ambitious federal goal, including for harmonization of laws to the extent possible, and sort of providing disincentives to states disincentives to states that may have overly burdensome regulation, but it doesn't attempt to preempt states' rights to continue to have this patchwork framework. So I wonder whether there are any shades of this for purposes of what we see in the crypto report that comes out July 30th that Adam commented about.
It will definitely be interesting reading, Josh. I'm with you. Adam, we'll have to get together and review it on behalf. And by the way, Josh, just so you're aware, you already know this, you inadvertently volunteered for another UCC deep dive, just raising that topic here on the broadcast, because it's definitely needed. And I've yet to meet someone who knows it as deeply as you.
Oh, thanks, Ron. Well, I will say for this, just bear in mind, everyone, very exciting topic, but the transition periods that were put in place for states adopting Article 12, some of them expired this month, some of them expire next month, others, adopted on a rolling basis. So just be aware of some of the implications and what this can mean for priority in terms of your existing security interests,
so, Josh,
which may involve crypto.
That's a good point. So let's ask the question for the layperson like myself who may not understand. That expires for state XYZ. What are the consequences of that?
Well, I have an article coming out about it, but I would say it depends on the state, and also this goes back again to where's the crypto? Who's holding it? Holding it because if they are, they might be holding it to an Article 8 opt-in, which obviously we know stuff is going on with the Prime Trust bankruptcy and questions about that. However, that's going to have an effect. If you're opting into Article 8, then you don't have to worry necessarily about Article 12. But say you are in a state that has adopted Article 12. Many caveats that I'm not going to go into because this is very in the weeds. But there are circumstances where if you had a previously filed UCC1 financing perfecting your security interest in certain assets before the adoption of Article 12, there was like a grace period, a transition period, maintain that priority, even if someone later, had control. Now, after this point, you could lose your priority. You're not necessarily going to lose your perfection, right? But wait for more in an article.
David,
may I just say one thing, Ron?
Go for it. You
may say, those of you listening at home, other than, oh God, this is so boring. Although I do find it interesting. You may say, okay, great. For secured parties, secured lenders, whatever. Why do I care? Well, if you are a borrower or an obligor under a secured credit facility, and your secured lender was supposed to have a first priority secured lien, and it no longer does, there's problems in terms of potential breach covenants, inability to. Sometimes you may even have an event of default. So,
Josh, thanks so much. David, should I be slightly worried that she said Article 8 and Article 12, and I sort of knew what she meant? I'm actually a little concerned for myself.
Ron, I think that, you're sort of at the point now where you could get an honorary, commercial legal degree from all the time you've spent writing these letters, watching us edit the different drafts, and poor Ron seeing more red ink on documents than I think a bunch of mid-year associates have. So yeah, no, I think you've earned sort of the right for that. So no, and Josh makes some good points. Like priority and the UCC are very important issues, and there's nothing worse than being a secured lender and thinking you have priority, and then there's a glitch or something hasn't worked out the way you think. There's a lot of angry people on the other side of those phone calls, and you don't want to be the one delivering that news.
Yes. David, thank you for the kind words.
I do want to pivot on to the Genius Act for a minute, because we had a robust discussion last night about the Genius Act. And I actually had a good conversation with one of the stablecoin issuers. And I don't think people fully appreciate the power of what these stablecoins can do. And I wanted to give one example, because when I was talking to the stablecoin issuer, he was talking to me about how institutions have to post collateral for certain types of trades. But when you post stablecoins as collateral and the trade is undone in, let's say, 2 hours, you can immediately get that collateral back and then post it for another trade the same day. Whereas with traditional dollars, you wouldn't be able to do that. And on top of that, you may be able to earn yield or earn rewards, or however we want to phrase it, for that period of time that you were holding that stable coin. So I think there's a lot of nuance into the benefits of this that haven't been fully appreciated.
David,
they will be more appreciated.
Yeah, no, David, I'm with you, and I was there for a good chunk of the conversation. It was a fascinating discussion. It really brings me back to the education curve you and I and Josh have spoken about for many, many years. And I was sort of surprised, in the early days of stablecoins, a lot of the conversation was, well, it certainly gets rid of the volatility. Plus, it's the best on-ramp to crypto. Generally, David, you remember the days of take your dollars, buy a stablecoin, deposit it in some account, and you can suddenly start trading. It's much more nuanced than that. And I wonder, there's got to be an opportunity to explain the benefits of the immediacy of returning collateral, for example, in the flow and management of capital. What does the industry need to do that better?
Well, I mean, look, in fairness, Genius just got approved. The
Fair.
rulemaking still hasn't been completed. But I mean, I do think that these scenarios should be contemplated, and that the processes and rules that are developed reflect how the markets work and how counterparties work. So that would be my big hope. But so I do think there's time for that. But we had a very spirited conversation, and sort of like one of our colleagues was like, they were like kind of the Larry David, stable coins are overrated, kind of thing. And it was just kind of funny. So we were having this, kind of animated conversation. And so I do think there's a lot more utility to it. And then don't forget, if you're in a foreign jurisdiction and you have, currency that fluctuates a lot more, this can give you some consistency. And, and I know Josh has worked with stablecoin issuers, so I'm sure, she's heard of some interesting things that may not have been socialized in the market. So I think there's a lot more to come on this.
So if we're going to dive into the stablecoin stuff, Josh, I'm sorry, did you want to respond to David?
No, I was just boiling over with jealousy that I couldn't be there last night.
We'll be there every month. We're hoping you join us next time. It was a spirited conversation across multiple fronts. David, I wanted to dive into the stablecoins a little bit more as well on kind of a market impact analysis perspective. So you and I have talked about Circle and the business model associated with Circle. Mike, I read recently that Tether is looking to make some strategic moves into the United States in a compliant way, and I don't know the mechanics specifically. David, I guess, and Josh, the question becomes, is there a limited capacity for the number of stablecoin issuers that can hit a marketplace, or do we see 100 of them and there's consolidation? How does that play out for the market?
It's a good question. I think it will come down into buckets, and obviously you have Circle, and you have Tether, and you have some other players who have name brand recognition. Ripple has their RLUSD. So I think you'll see some of the established players with name recognition go out to the markets and cut deals, and then you'll see new players come in. But remember, the new players are going to have to get to become a permitted stablecoin issuer, and they're going to have to get licensed either on the federal level or on the state level. So that's going to take some time. So you're going to have some first mover advantages, and I think you're going to see some foreign banks get involved and want to be able to do that. So they'll have to get licensed with the OCC to be able to do that in the U.S. So I think you're going to see a mix of incumbents, some new players, and then I think also, look, white labeling is a possibility too. You could have, I think that could, and think about it. So white labeling, fine, you don't have to do the tech build, you don't have to do the regulatory build, but, to gain market share, some of the stablecoin issuers may offer really nice arrangements. And so you can benefit from that too.
I know Josh wants to weigh in on that, but Josh, I got to add one thing to that. David, I don't necessarily disagree with you, but the newcomers to the market, how do they survive in the long term against incumbents like banks or a Walmart, for example, that already has broad market penetration? Josh, weigh in on this. Make sure I'm not going off course here.
So I think there will be consolidation. At the same time, I mean, I think just like some people were saying, well, how many altcoins can we have? I mean, they persist. Fair. Right? How many meme coins do we need? I do agree 100% with David about white labeling. This is something that we're seeing in practice, right? While some may want to truly issue their own, whether because they're banks or something like that, I think for many large corporates that are, well, I feel so British every time I say that, because it wasn't until I joined my firm that I started large corporates. But, if you look around at many of they ultimately have designs to have their own stablecoin. But as they're ramping up, often, or sometimes, at least in my experience, the white label piece is part of it. Right? As you're developing something in the background, you may go with a white label initially, and maybe you stay with it. But I think it's key for people considering this to make sure they look at the vendor agreements, vendors in this case being these stablecoin issuers, right? Because you don't just necessarily want to be a taker of their terms, right? You need to be able to extricate yourself later from all these partners if you want to have your own. And also the customers that you bring in, do they remain your customers? Those sorts of things. But I think that is sort of an elegant check. And there are many times where you don't even know it would be white label.
Right.
For large corporates in particular, there may be certain instances where you have an entity that has so many relationships, so much data, quite frankly, in that regulatory regime, but where they can actually potentially create a product that then adds value for their customers, because it's not just about the stable coin for these types of potential quote issuers, these large corporates. Really, it's customer retention, customer attraction, and making sure that it's a commercial success is just as much of a goal as just having a splashy announcement.
And also, like a lot of these stable coins, may be closed loop and just be used within an ecosystem. But I think ultimately to get broader utility, they need to be able to be traded and bought in exchanges or somewhere else to get greater utility. So that's another thing, like, which stable coins can have the utility and be used on a regular basis, but also be available to others outside of that closed loop.
David, to that point, though, if we're talking about closed loop or walled garden sort of stable coins, why is that any different than loyalty or rewards points then?
It isn't necessarily different from that, but I don't think that it's hard to explain, but I think it's different. But that's something we could go into the next session, because that's a long conversation.
We will definitely cover that. We're coming up on time. We're approaching the weekend. David, Josh, thank you both. Anything you want to cover before we head off for the weekend, which is going to be busy for both of us? Josh, go ahead.
I would love to get your thoughts. There's a lot of debate, including going on in articles, but also, all over the place, about the relative merits of stablecoins and banks issuing stablecoins versus banks tokenizing their deposits. I'd love to know your thoughts. Is this like an either or sort of thing? Or is there do you have any thoughts about this? I've just heard this being raised as an issue, as though these things are opposed to each other. And I am wondering how much of this is just fear, like FUD, right?
Yeah.
And how much of it is worth.
I mean, I haven't thought about it deeply. It strikes me a little. I don't see the mutual exclusivity from a functional use case perspective. And Josh, I'm just looking at the article you shared, and I continually hear this sort of stable coins are going to, blow up the heart of the financial industry. Tokenization is meant to blow up the New York Stock Exchange. To me, this is the hyperbole of not understanding, which, by the way, in my mind, really slows down creating the proper guardrails to make sure these things are usable in the marketplace. But David, I don't know if you saw the article, but stablecoins could be the heart of the next financial crisis. I mean, I could argue the private markets could be the heart of the next crisis. I can argue that the federal debt could be the heart of the next crisis. But David, go ahead.
Look, I haven't had a chance to read it either, but I will say that in a regime where the stable coins are backed by top U.S. paper and has to be liquid, I think the longest it can go out is 90 days or 91 days. A commercial like paper, it's all grade A paper. So I don't see that as much of a risk because if you really look at it, if there is this regulatory perimeter that we're in now, the stablecoin issuers are going to have to be within those. So,
yeah.
And then the last thing I would add is I think I'd be even less concerned of if a bank created a stablecoin about being able to stand behind their stablecoin too.
Yeah.
So the only thing I would say is that I've not thought about what if a hot wallet of a stablecoin issuer was hacked and that was sort of taken away and how that is dealt with. And then there might be a way to code out of that. I just haven't thought about it, but spitballing that while we're all in front of each other, that might be one thing.
David, add one thing to the analysis that you'll do, and Josh would love your perspectives on this as well. When we look at stablecoins and stablecoin providers, you could argue from a monetary policy basis, David, that the concerns about treasury auctions not being picked up in the market now get alleviated because you've got an additional flock of buyers that would buy into treasury auctions where you and I remember about 3 or 4 months ago, people were concerned, the 10-year will be a flop. And in some instances, the Feds had to come in and buy treasury auctions just to make sure treasury receives the funding. You could argue, well, now you've got a blizzard of different stablecoin issuers will absolutely weigh in to buy it in the market.
And if you're a foreign issuer of a stablecoin, you're going to have to buy U.S. denominated,
that's right,
securities to back those stablecoins. So that's another sort of source of income or a source of individuals who will be buying or companies buying our treasury. So,
my God, we're getting into monetary policy, David.
I think that's additive. I don't think people fully appreciate that. That's a nuance here that's favorable to our country's economic system. So, Josh, what are you going to be doing this weekend on your palatial Jersey estate?
First of all, finding it.
She laughs. But here's the thing, David. She laughs, but she doesn't say no.
My estate is far from palatial, but I will hopefully, in addition to, as usual, catching up. I'm really excited about everything that's going on. I hope also to get some sun other than me running down the street to grab coffee immediately before our cast. What about you guys?
Yeah, Ron, what are you up to this weekend?
I am going to be doing a couple of different things. We are making significant headway in our plans for everyone in the audience. Our in-person event on October 23rd in New York City. Josh will be on stage. David will be on stage. I'll even be on stage. We've got a lot of guests. We're opening up our public ticket sales for non-members sometime early next week as well. For everyone in the audience, if you're a WSBA member, you've already received the invitations. Please register. It'd be great to have you there. And for those of you who are not members, stay tuned. It'd be great to have you join us in person. Josh, like you, lots of different reading that I have to keep up on. We're also doing work on the response to the Senate committee. And I started a new historical fiction book that I'm actually going to try to spend a little bit of time reading. And I want to shout out to Phil Berg for recommending it to me like 6 months ago. And I finally started reading it. David, what about you?
I'm headed down to Florida this afternoon, go home for a few days. And I'll be doing a lot of reading. And also, I'm very curious to see, we have a Fed meeting coming up, and, there's chatter about maybe we do get an interest rate cut. And so I think that's going to be interesting. And then I attended a really interesting presentation, a webcast by Winston Strawn about the Stablecoin Act. So I plan on reading the materials they had, and that was a helpful, meeting that webcast they had for the Stablecoin Act. So I'm going to be reading that as well. So just some light reading on the flight.
David, 2 rate cuts this year, September and December. That's the wager.
Okay. Yeah.
That's the wager. Emma, you lured us in, but with a different wager.
See, the problem is, Ron, I kind of agree with that. So we'll have to.
So you won't take the other side of that?
I won't take the other side of that, but maybe we'll do like a little over/under on the ETH price. That sounds a little.
Yeah, you know what? Still a little worried. I'm not a bet chicken, but David's crystal ball, Josh, is more powerful than our prognostications. David, Josh, it's great to see you both. Adam and Emma and Greg, shout out to all of you. Thank you so much for being WSBA members. For everyone in the audience, if we didn't get to your questions, info@wsba.co. If you've got anything for David or Josh or I, please email us. We will be back next week, everyone. Have a great weekend. Thank you for joining us. Bye-bye.
Sure.
Thank you. Bye.